Welcome, friends. Nowadays, Adani crisis is looming over India. There is big noise in parliament also. Oppositions are at their feet. And China is opening border. So there is both impact on Indian equity market. When we see 2020-22, India's equity market or share market have a stellar performance. If we compare this with 2019, it has surpassed that one. From lowest of COVID 2020 March we see, from there it has doubled. So India's growth story was a wonderful, and investor from worldwide has invested here and benefited hugely. But now this report, Hindenburg report, have come at very unfortunate time. Yes, of course, India has got benefited, being China closed for last 3 years, almost closed, virtually closed. But China has started to reopen. He, China is now opened to some extent, or we can say almost open. But India business sentiment is getting hurt due to Adani crisis. What to do in this condition? In my view, retail investors should preserve their capital right now, have in a liquid fund or debt fund, short-term debt fund for time being, until unless this volatility settles. If such condition prevail for another couple of months, then the valuation of the Indian equity market will be settled, it will be attractive, and then you can invest and get benefited hugely. Whatever rich valuation have now started to erode from last Tuesday when this report published. Actually, this Adani group, especially seven companies group, have lost almost 100 billion in 1 week time. And this turbulence is not over so far. We have to see how this unfolds. Yes, of course, Adani share was highly valued, but believing this Hindenburg report is also not possible. It's telling that whatever actual price is 85 jacked up, if its real price is only 15%, it is not also believable thing. We should not go and dissecting what what is the actual, what will happen. In my view, there are other hundreds of company, quality company, where we have opportunity. Yes, we can wait time being until unless this turbulence continue, and after that we can start investing again. You should not forget that India was being termed as new factory of the world to replace China. So what we think overnight this has gone? No. India is attractive place India is doing so many structural changes, bringing so many PLA scheme, a specific sector wherever they need to counter China, especially, and to be an Atmanirbhar, self-reliant. In the recent budget also, India has got major boost in infrastructure development, railways, defense. So all over this manufacturing and infrastructure sector is going to get huge benefit. And so many businesses is living and establishing their factories in India. Even Apple's have their leg in India now, currently put it. So if you will see overall India's capex, especially through budget, and it is expected to induce corporates expenditure capex also. So overall capex situation will be very good for FY24, and definitely this turbulence will be over sooner or later, and India growth momentum, growth prospect will continue to shine. And definitely coming years is for India. Believe in India's growth story, and you are bound to benefit out of this. If you see last year, India's stock market performance was wonderful, exceptional, whereas Hong Kong's Hang Seng Index or Shanghai Composite Index, they were 15% tanked in 2022. But in a Indian stock market, from lowest of March 2020, it has doubled. And of course, there is no structural weakness in India's growth story. This government is doing more and more structural changes, refrain from populist budget. They have clear eye on growth where growth can be happen. They have clear cut capex. So, my friends, believe in India's growth story, and of course, we will all be bound to benefit it of this growth. Thank you. Bye.